Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live rates and then we're going to be talking about CDFI primary no income loans. That is definitely an amazing special product here that we will get into momentarily. Very interesting show here today. We got the chat up on the screen. Feel free to drop a comment in there. We appreciate those of you tuning in nice and early. Happy Friday, everyone. And it looks like we're live on all the platforms, so we'll go ahead and we'll get it started. You can keep dropping comments there in the chat. You can also drop any questions that you have in the chat as well. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president Nick Hershey and our sales manager Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live pricing, and then we do a deep dive into a different loan topic. Now, today's loan topic is going to be CDFI primary, no income, no ratio loans. So quite a mouthful there, but Jose will take us into a deep dive and probably one of the most special products that is offered out there. But before we do that, we will go through the live rates. So Nick, if you're ready, let's go ahead and pull up today's pricing and let's see what it is looking like so far.
All right. So again, finally some good news. So hopefully we see that reflected here soon. Again, a lot of volatility. Remember, the markets are reacting to every bit of news, which again, we had some favorable news today, and the markets are reacting. So let me actually refresh my screen here. But what I will pull up in a second is our live pricing tool that will compare the APR across the different programs that we have. And it looks like not many of them have updated quite yet today, but we should see some activity later. These will show our APR across our basic programs for a standard scenario. A $500,000 purchase price, $400,000 loan amount corresponds to 80% loan to value, 20% down payment. And we will set a 760 estimated FICO credit score for all of the demos, and we will set an estimated 40% debt to income ratio for the demos. And when we get down to the DSCR options, we're going to use a value of 1.5, which I will explain in a second. Now, if you'd like a full breakdown of all the itemized fees that go into the APR, a full loan estimate, please get with our team members. We have over 300 loan officers to help you out. Let me share my screen here, and we'll check out the live rate options. So first up is our conventional option, 30-year fixed conventional primary. This is the first option for most borrowers. Still about the same as yesterday. Hopefully we see this adjust later this evening or this afternoon. Rates as low as 6.875. Final APR comes in at 7.185, which again is about the same as yesterday. So good option there, but I hope we see that downward momentum with the positive news. Now, if for any reason our customer doesn't qualify for a conventional program, typically the next option we want to present is an FHA option. So today rates come in as low as 5.875 and the final APR of 6.866. So FHA allows a little more leniency on credit issues as well as a higher debt to income ratio. But this APR does include the upfront and yearly mortgage insurance that is required. So make sure to consider that. That's why when you compare these, they're about the same, with FHA beating out conventional by a little bit today if our customer qualifies for both. And our customers that need to use FHA, definitely a good option here, as it is very comparable to conventional, even with all the extra fees that are needed. Now moving on to VA for our eligible veterans and active service members. If you are eligible for a VA program, these are amazing. Rates come in today as low as 6%. Final APR 6.324. So notice the APR is lower than both the conventional and FHA options. Definitely a great benefit for our vets out there, and definitely want to use that program if you are eligible. And scrolling down to our next row here, the final government agency option is our USDA option. USDA is only eligible for properties in those USDA areas, typically correspond to the rural areas. And if our customer does qualify and the property is in an area, these are great options. Rates as low as 5.99. Final APR comes in 6.748 with all of the additional fees that are needed. So typically we'll compare this to an FHA option. Most of our borrowers that are shopping in these areas would have these two options available. And you'll notice USDA is a touch cheaper on the final APR and definitely a touch cheaper than conventional as well. So if you are looking in those areas that are eligible and you're eligible for the program, USDA, great option. Now, where we love to present our additional options, other banks or lenders may have to deny our customer if they don't qualify for these four, but we have thousands of other options. First up here is our non-QM alt-doc primary, which would typically be an option like a bank statement we went over the other day, 1099, P&L, all kinds of different documentations we have, but the lowest price is typically a bank statement or similar. So if our customer doesn't qualify for a conventional option for some reason, we may need to use alternative docs. This program comes in as rates as low as 7.125 today. Final APR 7.369. So notice it's very comparable to conventional, especially today, and within a half a point typically. So if our customers need to use it, definitely some great options to go bank statement or similar. And moving on to investments, we have plenty of non-QM options for investments. Again, this option that shows is probably a bank statement or similar. Rates come in as low as 7.5 to use alt docs for an investment property. Final APR 7.806. So that is a good option for our investors, but let's check out the other options. So conventional is an option for investments. Remember, the government programs are not, so no USDA, VA, or FHA options to show. But we do have our 30-year fixed conventional for an investment property coming in at 7.5% today. Final APR 7.855. So notice it's a touch higher than alt doc. This might go down a touch today as well. These are pretty much equal, but definitely recommend our customers check out our favorite programs, our DSCR options. So DSCR stands for debt service coverage ratio. We simply use the estimated rental income from the property, no income, no employment. If the estimated rental income from the property is greater than the expenses, aka the property cash flows monthly, that's a ratio of 1 or higher, which is typically preferred. For these examples, I use a ratio of 1.5 so we can see all of the programs. First up here is our option with a 3-year prepay penalty. That comes in at 7.374 today. Final APR 7.714. So notice that actually beats conventional. Absolutely amazing to use a DSCR program to beat conventional. And to sweeten the deal, we have a few programs that do allow a 5-year prepay to get an even lower rate. So with a 5-year prepay, we can get rates as low as 7.125 today. Final APR 7.432, which is really beating conventional. And moving on to our other options, our no prepayment penalty option. Definitely not as common, but some investors do not want to prepay. Rates are a little bit higher here, 7.999. Final APR 8.513. So notice that's a touch higher than conventional to have no prepay. So definitely recommend our investors use the prepayment options to get a sweet deal here. And the final two things that show up we'll talk about here are 30-year fixed second mortgage options for a primary home. So a lot of people out there have a very low rate first mortgage if they've got it in the last few years, and they don't want to refinance to get cash, a cash out refinance, and touch that first mortgage. So their options are either a HELOC or our new fixed rate second mortgages, which are typically better rates and terms. So today we can get rates as low as 9.625. Final APR comes in at 10.113 for a fixed rate second mortgage to get some cash out and not have to touch the first. And finally is a cool variation of our DSCR option where we can go 40-year fixed. Jose did an episode on that yesterday as well. So a standard 40-year fixed DSCR with a 3-year prepay comes in today at 7.75. Final APR 8.058. So notice it's just a touch higher than conventional and some of the other options to use 40-year amortization and increase the monthly cash flow for that investor. So these are for investors seeking to increase their monthly cash flow by utilizing 40-year amortization. Now let me switch my screens and we'll get into today's topic, which, as Kyle mentioned, very unique. Can't do that in the live pricer. Again, that's why we love to do these deep dives. We can't always price everything in a quick example where one size fits all, right? One size does not fit all, and that's what this program's all about. CDFI is a very unique program. Jose is going to explain what that means, right? You're going to define the acronym first, but these are primary home loans that allow us to use no income documentation for a primary home. So not a DSCR loan like we talked about before. This is a unique product for a unique set of individuals, especially in today's market. So Jose, let's explain who this is for, exactly what it means, and then let's check out the prices.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Good day today. We had some downward movement in our 10-year Treasury, almost 6 basis points. So we obviously have some great rates today, especially in our DSCR options. So what does CDFI stand for? Well, it's actually the CDFI fund, but CDFI stands for Community Development Financial Institutions Fund. And their official definition is the CDFI plays an important role in generating economic growth and opportunity in some of our nation's most distressed communities by offering tailored resources and innovative programs that invest federal dollars along with private sector capital. Right, so it's basically um, to help borrowers that normally would not be able to get into a home. Now, where it achieves that mission is through the elimination of income based requirements or job based requirements. However, that does not mean that it is a low LTV option either. Uh, there is no income or job requirement. It's a primary and second home only, not meant for investors at all. But it is maximum 80% LTV. And at the 80% LTV, for the 80% LTV option, there is a 24-month reserve requirement. There is a max 75% LTV option that has a lower reserve requirement. I believe that one is 6 months reserve requirement. So it is directed at those communities that may not be able to qualify, and then additionally, if you are what they refer to in the program as CDFI eligible, there is a discount to the rate. Could be anywhere from 0.25% to 0.5%. CDFI eligible would mean Black or Hispanic borrowers. So that would be a CDFI eligible borrower. However, that does not mean that the program is not open to all borrowers. It is open to all borrowers as long as obviously they have the credit and the asset requirements to meet the program. But if you are CDFI eligible, then that is the core mission of this program, and you get an additional discount off the rate. Now, I will also state this is a borrower paid compensation program. So the fees I'm mentioning here in points are loan discount fees. So there would be an additional broker fee for this product because we are not the lender on this product. So let me go ahead and share the options with you today. Now, our maximum LTV, excuse me, like I did mention, is 80%, so minimum 20% down with a 740 plus credit score. That's the top credit tier. And our rate, 9.375% at a cost in loan discount of 1.75 points. And our next option is with a 720 to a 739 credit score. The good news there is that we are still at 80% LTV, only 20% down payment. And again, remember, minimum 24 months reserves, which can come from a gift, by the way. All of the funds in this loan, the down payment and the reserves and the closing costs can all come actually from a gift. That's one of the nice features of this program where they really try to help out because they know it's tough to get all that money in one shot, right? 24 months reserves, 20% down. So 9.625 is our interest rate here at the same cost of 1.75 points. But again, the good news is only 20% down still. So now we drop to our next credit tier, which is the 700 to 719 credit tier. And now, unfortunately, the LTV does drop to 75%. It is 25% down requirement. Good news, rate drops and the cost drops. So our rate is now, again, 9.375. And the cost is 1.25. And also so that you note in these quotes, I am providing the lowest cost option. This is not a low cost program by any means. It's a very specialized program, the only one of its kind. And next option now, 680 to 699 credit score. We are still at 75% LTV, only 25% down. Our rate does increase a little bit to 10.125% rate at a cost of 1.25 points. So 75% LTV is the max at a 680 to 699 credit score. And these are all primary purchases. And then our lowest credit tier that is allowed for this program is 660 to 679. This program used to go down to a 640, but has had adjustments. So at a 660 to a 679, the LTV does drop to 35 to 65% or 35% down payment. Rate is 9.75%, and you're talking about 1.25 points for our lowest credit tier options of 660 to 679. So I wanted to show you a second home option, which you will see for the second home. It is the same cost and same rate as for the primary. This is a great program for, and this jogs my memory here as a second home because I have done this program. I have originated this loan for a borrower, U.S. national, U.S. citizen, actually, U.S. credit and everything, but living outside the U.S., not having submitted tax returns for the past 2 years because they're not working in the U.S. They have their savings and they wanted to buy a second home in the U.S., which was going to be occupied by them every now and then, and mainly occupied by their daughters who were going to go to school in the city where he was purchasing the home. So obviously, this was the only option because he was not a foreign national. He's still a U.S. national, just living outside the U.S., not working, not working in the U.S., not reporting income in the U.S. Perfect program, happy closing. So that option here would be 9.375 at a cost of 1.75 points and still only 20% down. So now let's go with some cash out refi options. Now, LTV is going to be a little lower on this option for this program because primarily it is meant to foster home ownership. Hence, the LTV for the purchase is substantially higher at 80% than for the cash out refi at 65%. And here, 9% is the rate, lowest cost option at a cost of 1.25 points for our cash out refi on our primary residence. And now that was at the max credit score. Now at the lowest credit score tier, 660 to 679, our LTV only drops by 5%, which is great. We're still at 60% LTV. 65 was the max at a 740 plus. Still the same cost, 1.25, but our rate does increase to 9.875. Lowest cost option. And now a second home, 1 unit, cash out refi. Again, 65% LTV is the max, and the same rate that we were able to attain for the primary is the same rate that we can attain for the second home, which is 9%. At a cost of 1.25 points, being our lowest cost option. And our last example here is for the second home cash out refi at the low score of 660 to 679. And again, as expected, the rate for the second home is the same as the rate for the primary, 9.875 at a cost of 1.25 points. So this loan is a mind blower for most people. Another example where we've been able to successfully use this loan, we had one of our MLOs, had a borrower, wanted to buy a new home for like $1.5 million, did not really want to sell their existing home, which was a little bit smaller, but right around the corner from their current home. But the borrower had an issue, was that he was paid in stock options that hadn't yet officially been given to him. So he was going to get a lot of money in the very near future, but very little income to show now. So we actually did the loan as a second home purchase under the wife, and were able to close this loan with 20% down. Wife had like an 800 credit, better than the husband, so we just did it under the wife, and were able to successfully close that loan. And then they were able to sell their existing property in a calm and not hurried manner, because they had to close to be able to close on the other one. They were able to close on the one that they bought, sell their current property with more calmness so that they could get a higher price. And then as soon as they sold that one and they were going to get their money, maybe a year or two down the road, they would consider refinancing, paying down the balance and all that good stuff. But the main thing is they were able to get the property they wanted at the moment that they needed it without any undue hardship. So that's the beauty of the CDFI program, and how you see it's not just for low-income borrowers, but if you are that type of borrower, it is a great benefit for you.
All right. Very, very interesting program. Let's see here. I expected some more questions, actually, but it looks like we only have one question, which is how long minimum does the borrower have to live in the second home?
Yeah, we would have to see the actual guidelines for the product, but typically on a loan, you have to be there at least 1 year to meet that program's parameters. So if you purchase it and apply and close on it as a primary residence, you have to be there at least, or plan to be there at least 1 year, or else you would be considered occupancy fraud. Now, mind you, there are unexpected circumstances, like you get transferred to another city in your job, right? Or what, and you got to move out of the home. That's a totally, and rent it out. That's a totally different situation. But typically all loans require occupancy in that manner that was applied for at least 1 year. So you can't buy it as a primary or second home and 2 months down the road, turn around, move out of the home and rent it out as an investment property.
Well, remember, in this case too, you'd be much better off just doing it as an investment property, right? Because a DSCR rate would be much cheaper, much easier. This is only because it has to be a primary or second home, right? This is the opposite of what you would think, right? You would want the occupancy to be investment if, you were actually going to make it an investment property, right?
Absolutely.
Yeah. So this is just to accomplish those issues with primaries and second homes.
Yeah, you saw the rates that Nick posted a little bit, right? 7.125 for a DSCR is a lot lower than 9.375 for a CDFI.
All right. I don't see any other questions, so let's go ahead and wrap it up. An amazing program there to use when you need it. I think, as Jose was saying, Nick's used it for crypto borrowers in the past and stuff like that. So definitely there's times to use it. And when you do need to use it, it's good to know about it. But we appreciate everybody tuning in. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a different deep dive into a different loan topic. So we will be back next week with some new topics. We appreciate everybody tuning in. Have a good weekend. We'll see you on Monday, 11